Hi, folks. Nick Shaheen here, recapping the week ending 8/14. Back from vacation. Thank you very much. All right, week. If you look at the scoreboard, it's much ado about nothing. Oh, look at that. Even the okay. So if you look at the scoreboard, it's much ado about nothing. Obviously, that wasn't the case. The week ended on a high note on Friday. Well, not very high, but high nonetheless. We had markets that were up between 0.4 and 0.6%. The small caps, the good news, the small caps led up on Friday, which is a basket of 2,000 stocks, so we listened to that. The weirdness was the fact that the VIX is down 4 or 5% back in the 12s, high 12s, 12.8. But it could be the fact that next week is expiration week for the VIX and expires around Wednesday, and that usually creates some shenanigans. So it's not as good a gauge. But usually when the VIX comes down to 12, it's time to worry about the markets because people will tend to be too lax for the uncertainties that still exist. One uncertainty doesn't exist is the Greek bailout. The Greek bailout has been approved, voted on by the parliament in Greece, which was one hiccup, possibly, but it got out of the way. Second, the Eurogroup agreed to do it. But I do believe that there might still be a hiccup on Tuesday, Monday or Tuesday, where Germans need to vote on it. I'm not sure about that part. But if not, then the payment on the 20th should be in check. So all we need to do is make sure that the Greeks don't withdraw too much money out of their banks, because then they'll need a fourth or fifth bailout. All right, so this would be the third bailout for Greece, and it's massive for such a tiny country, but they're happy they got it done. All right, overall, Apple ended the week also on a okay note, around $116. And it provided some stability. However, not before it had a lot of instability. If I switch over to Apple, this is Apple. Too low, 109.63. Hopefully you caught that. Too high. So now we're in the middle of too low and too high. So there's no rush to do anything. However, technically I can see them trying to attack this number right here, 119, and if so, it could provide for some upside. Open interest doesn't provide that same certainty, but the range is still intact. So we have a neutral zone, and that goes for open interest for all the indices. We have support below, we have resistance above, and we have magnets exactly where they've been. You know where they've been. We've been covering them week after week. So, meaning I don't forecast debacle. I don't forecast a run. We need a headline for either cases. One potential headline for a run higher, this is the S&P, this is the NASDAQ, and these are the small caps. One potential catalyst upside would be the fact that we get some sort of news that there's no rate hike in September. I don't know how it's going to happen. Somebody comes out and says it, Yellen slips it, I'm not sure. That will cause a big rip. Remember the rip we had on the, hey, I'm not raising rates in April back in March? We ran like 100 points in the S&P. So that's also on the table. The other thing that a breakdown from here, if we, remember I said if we lose 206, 205, 04 will come fast. Well, if we get there and we lose that, then 200 will come fast, and then gosh, help us. But for that, we need a shoe to drop. Maybe from China, more shoes to drop, I'm not sure. What I am sure is this box right here represents the meander. And guess what? We touched both sides of it in the last 3 or 4 weeks, so we're still meandering. So iron condors pay the bills. Same story with the NASDAQ. However, we did have a huge peak right here and right here based on some massive mega moves on mega earnings of big cap stocks, mega cap stocks. However, I still see here a lower high scenario, and you can argue for a lower low. So we need to break that habit. Otherwise, this junction right here becomes very important in the Qs. If we lose it, straight shot to 100. Not so happy are the small caps. We are the furthest from the, I believe, eyeball from the all-time highs, which came recently. Now, the weekly candles, yes, we're green on the SPY, but barely so. If I zoom in, maybe. This is a doji candle, meaning it's a lot of indecision, okay? Like this one, there was no indecision. They opened here and they closed here, no doubt about it, bearish, right? This one, they opened here and closed here, meaning they opened, they tried to sell it way hard. They tried to run it but then they decided they don't know what to do with it, so they closed it almost exactly where they opened it. That's indecision. Usually it's followed by a big move. Those are weekly candles. Same indecision in the small caps. If I look at it, okay, it doesn't want to zoom in for some reason. So here too, we have a descending channel, which I don't like. And technically, one could argue that it could be headed down to here. It broke the 120. Did it close over 120? Okay, it closed over 120 on the week, which is pretty good. However, it's not a good behavior for price. In other words, we need a reason to run. Give me the reason to run other than just pure hopium. Okay, the thesis is still the same. There's some room for upside, but the reason to run up has gone, so we need new reasons to run. All right, so this is what the ranges, how the ranges play out. As far as opportunities, I would be careful chasing individual stocks or indices based on the movement of individual stocks. For example, if you like Apple because Apple is running, then chase Apple. Don't chase the indices that Apple moves. Okay, so yes, Apple, they're not going to ring bells on bottoms and highs, but you know, I knew exactly immediately that 109 was way too low, and if you took some credit put spreads, you're in the money there. And then you can also pick on oil. Oil is a rigged market, and we have a lot of bad scenarios playing out there. So, you know, if you want to buy some puts there to or cash in some profits if you have them. But mainly, I'm worried about the IBB, which represents all the biotechs which have been on auto control, cruise control, like buy to all-time highs, and now they're falling out of sorts. So this area is really important. If they break this area right here, they could be coming down to here. So if you have profits in the biotech IBB, for example, I would take them. Obviously, maybe too late for you if you own Biogen, but not too late if you know that there is a possibility it can go a lot lower, off chance of it going down to here. So, meaning, I'm saying don't chase, trade ranges as you know them. If you don't know them, get help. You can message me. I'll be more than glad to help you. All right, Nick signing out. 8:14.